Hey friends, welcome back to the channel. This is going to be a long one. We're going to look at macroeconomics and we're going to zoom out and look at what's really happening in economics, cryptoverse, and everything in between. So without further ado, let's begin. And I'm going to start off with an individual called Russell Napier. Now, Russell Napier, he's an economist, and he has been an advisor on asset allocations to global investment institutes for over 25 years. He's made a plethora of different books. Russell Napier is a market historian, and he warns of a 15 to 20-year phase of structurally elevated inflation and financial repression. He shares his views on how investors should prepare for the new era. He's made this article back in 2022. Until this day, he's actually right. It's eerily spooky. Russell Simmons has never ever been one of those eternal inflation warners. On the contrary, the market historian who experienced the financial crisis 25 years ago at first hand at the brokerage house of CLSA in Hong Kong wrote for years about the deflationary power of the globalized world. 4 years ago, in 2022, the tide turned, and Napier warned of a vicious return of inflation. We have inflation. Inflation in America went up to 9.28%. UK went up to 15%, and parts of Europe, and in Europe, in average, it went up to 18%. This is all old news, but it's eerily spooky how everything he's predicted turned out correct. He said we will see a boom in capital investment and reindustrialization of Western economies. Maybe people will like it at first before years of badly misallocated capital will lead to stagflation. Today's episode is about stagflation. People are speaking about recession. Recession this, recession that, 2007, dot-com era, but no one's really talking about stagflation. What's stagflation, by the way? For those that don't know what stagflation is, it's an era where we have high inflation and high unemployment. But the contrast to a recession compared to stagflation is that the economy is still growing. So what causes a stagflation period? It's misallocation of funds. In summer, he predicted that inflation was coming back. We were looking at a prolonged period of financial repression. We're currently at 8% inflation in Europe and the US. My forecast hasn't changed. This is a structural problem, not a cyclical problem. He believes that the economy is heading not to a command economy or a social economy or a Marxism economy, but in fact, we're heading into a political economy. The French will call this system dirigiste. This is nothing new. It's happened in the past during the 1930s and the 1970s. We've just forgotten how it works. He's also emphasized that we've been in a period of the free market. He's emphasizing that during our time, most of all of these armchair economists have only been trained in the free markets. But they haven't been trained in a political economy, also known as digest. He's asked many questions during this whole article, and the main issue is the debt to GDP. We have massive debt to GDP. We haven't seen this kind of era since World War I. We've never seen stuff like this, and we have massive debt. The UK has massive debt, Europe has massive debt, and parts of the whole globe have huge debt. But the undisputed champion of debt is Japan. Japan currently has 222% to debt to GDP. They are the undisputed champions of the world. Here is the 30 countries with the highest and lowest debt to GDP. You have number 1, Japan, number 2, Greece, number 3, Lebanon, and number 4, Italy. The lowest countries with the lowest amount of debt to GDP is East Timor, Libya, Afghanistan, Estonia, and Russia. Nigeria is also in the top 10. China is also in the top 10. Funny enough, America is in the top 30 of the most indebted country in the planet. Have a look at this article. It's in the link in the description below. He continues to talk about economies around the world and how they will do financial repression to the economies. We're going to have so much debt in this system that the central banks and governments around the world will try to kick the can down the road, and it's going to fail. And given that nominal growth consists of real growth plus inflation, the easiest way to do this is through higher inflation. Yes, engineering a higher nominal GDP growth through a higher structural level of inflation is a proven way to get rid of high levels of debt. That's exactly how many countries, including the US and the UK, got rid of their debt after World War II. Of course, no one will ever say this officially, and most politicians are probably not even aware of this, but pushing nominal growth through a higher dose of inflation is a desired outcome here. Don't forget that many Western economies' total debt to GDP is considered higher today than it ever was even during World War II. We've never seen this much debt ever in our lives. In 2020 and 2022, they did so much money printing that it superseded when we left the gold standard in 1970s. He predicts that inflation in the next 5, maybe 10, maybe longer will be around 4 to 6% because it will be a level that the government can get away with. Financial repression means stealing money from savers and old people slowly. The slow part is very, very important in order for the pain not to become too apparent. We're already seeing respected economists and central bankers arguing that inflation should indeed be allowed to go higher than 2% target set in the past. In 2020, gold was the best performing asset. In 2024, it looks like gold is the best performing asset. Gold is indeed screaming and telling us something. This is no coincidence, and this is definitely not the Chinese right here. Central bankers around the world are selling assets. They may be selling treasuries, bonds, stocks, capital, you name it. They are selling assets in order to buy gold. Gold is broken out and is up 30%. Gold is making all-time new highs. This is the weekly, the monthly, and the quarterly. Gold is telling us that inflation might be coming back. We had massive, huge inflation during 2020, and it was the best performing asset. In 2024, maybe inflation is heading back up. Governments around the world still have high inflation. You have the UK still at 3 or 4% inflation core. You have Europe still has nominally high inflation. You have the US still has relatively higher than projected. Russell Napier also believes central banks no longer are important in the economy because we're heading into a political economy. And a political economy is basically when politicians and governments will take over central banks. They're going to tell central banks where to allocate funds. And you know what? The Fed is not going to fight the government. They are not going to fight the government. We're going to be in an era where politicians are going to take over money printing, money allocation, and resources in the economy. But the issue is this: as political parties change, countries' economic policies often change as well, based on the ideology and goals of the party in power. This can impact areas of the economy such as monetary and fiscal policy, labor crises, rising inequality, GDP, and disaster management. These changes in the economy can turn into a prompt new political laws, policies, or electoral campaigns, or election outcomes. The rise of globalism and international trade means that the politics of one country can have a strong impact on the economy of another. Did Berlin ask the European Central Bank whether they can create a rescue package. Did any government ask? No. This is considered an emergency finance. No government is asking for permission from the central banks to reduce loan guarantees. They just don't. So you're saying central banks are powerless. They're impotent. This is a shift of power that cannot be underestimated. Our whole economic system for the past 40 years was built on the assumption that growth of credit and therefore broad money in the economy was controlled through the level of interest rates and the central banks controlling interest rates. But now, when the governments take control of private credit creation through the banking system by guaranteeing loans, central banks are pushed out of their role. And this is the kicker. There's another way of looking at today's loud hawkish rhetoric by the central banks. Teddy Roosevelt once said that in terms of foreign policy, one should speak softly and carry a big stick. What it tells you, when central banks speak loudly, perhaps they're not carrying a big stick anymore. He continues to talk about how this shift is going to happen, how central banks are going to have less and less control, and how governments are just going to create credit, allocate different resources, and have a misallocation of resources. But the kicker, and the very, very important part, is this. He predicts that gold is going to outperform vastly, and he's completely correct. During that time in 2022, gold was actually underperforming. But now, what we find ourselves is that gold is outperforming. So the end game will be a 1970s style stagflation. That's the end game. But we're not there yet. He says first comes the seemingly benign part, which is driven by a boom in capital investment and high growth in nominal GDP. Most people will like it in the beginning, only much later when we get high inflation and high unemployment. When the scale of misallocated capital manifests itself in a high misery index, will people vote to change the system again? In 1979 and 1980s, they voted for Thatcher and Reagan, and they accepted the hard monetary policy of Paul Volcker. But there is a journey to be traveled to get to that point. And don't forget, by the time Thatcher and Reagan came in, debt to GDP had already come down to new lows. That enabled them to introduce the free market policies. In the markets in the past 40 years is useless in the new world. For the next 20 years, we need to get familiar with the concept of political economy. This is what I've believed for a while, and I've followed this guy for a long, long time. He didn't just come up. I read everything. He didn't just come up yesterday, you know. I can't wait to do a video. No, I've been following this guy for a long, long time, and I'll be honest with you. I don't think we're getting a recession. I don't see it. I really, really, really don't see it, because governments are getting involved every single time. We do not live in a free market. The Fed and the governments just continue to step in. They continue to step in. They hate recession like it's a plague. Honestly, like it's a plague. Not only do they hate the word recession, and they'll do everything in their power. Even if we are in a recession, they'll make a new word for it. They'll make a new word. Look at the UK. We're in a recession. They called it what did they called it the cost of living crisis. Honestly, we're not going to see a recession for a very, very long time. And matter of fact, we're going to see a stagflationary environment. That's the God honest truth. Look at gold. Look at gold. Gold is heading higher because why? People realize that we're going to see inflation again. Inflation is going to pick back up again, like the 1970s. There's something called the wealth effect. People see higher stock prices, and what happens? They take that money and they spend. Even if they don't even take that money, they look at their portfolio and they're like, oh, okay, I'm up. They see their net value, they're like, oh, okay, I'm up. So what does that mean? They begin to spend because in their head, they believe on paper that they're rich. So they just begin to spend. It's called the wealth effect. Let me show you. It's a behavior in the economy suggesting that people spend more as the value of their assets rise. It's an idea that consumers feel more financially secure and confident about their wealth when their homes or investment portfolios increase in value. Mr. Russell Napier, believes that BTC is not going to do well. He believes gold is going to outperform, and he also believes value stocks are going to do really, really well. He also thinks that tech stocks, some tech stocks will do phenomenally well, but he doesn't know which ones. Could be Microsoft, Apple, Nvidia. He didn't know at that time. He was correct. There is an opinion that I do not agree with, and that, ladies and gentlemen, is BTC. BTC has already gone up from year to date. I believe it's gone up from year to date. I think it's gone up by 150% from year to date. Let me check. Year to date, BTC has gone up by 136%. It's outperformed S&P 500, the Nasdaq, the Dow Jones, gold, and many, many other assets. BTC is still the best performing asset in the world. Solana is up 644%. Just Solana by itself. That's on the yearly. Ethereum on the yearly, and it's having a terrible year, to be fair, is up 62%. And it's having a terrible year. It's only up 62%. It's outperformed the S&P 500, the Dow Jones, the Nasdaq. It's outperformed everyone. He believes that tech stocks will do very, very well, and financial stocks will do very, very well. But he doesn't know that crypto is an amalgamation of both tech stocks and financial stocks. Central bankers are selling their assets like the DXY, and that's why it's gone down. And they're buying gold. They are buying gold hand over fist because we have a recessionary period, an inflationary period, just like the 1970s. Okay, and let's have a look at the 1970s. Here is the period between the 1960s and the 1970s. Okay, and for that whole period, it's called the lost decade for a reason. Okay, a whole generation never saw an all-time new high. A whole generation. Okay, so we have from this period to this period, so 1965, okay, all the way to the 1980s, we had an inflationary period. That meant the investors didn't make any money, which is crazy to think about. A whole generation didn't make any money during that time. From the lows to the highs, we went up 45%. And then we went down 35%. Then went up again 65%. That was a fake out. And again, dropped down 47%. Went back up 74%. If you bought right here in 1965, it will be the same value in 1978. Literally 30 years later, and it's the same price. XRP holders have been holding XRP for the past 8 years, and they're in pain. Imagine you've been holding the S&P 500 for the past 30 years, and it did nothing. We were in this situation for two reasons. Number one was because we were in a political economy, similar to a command economy. There was no free market rules applied to this era. No. It was a political economy. And for 20 years, we saw this. Inflation kept going back up. Politicians would get involved. What happened to gold during that time? It broke out, made all-time new highs, went up to $420 per ounce. That's what happened to gold during the inflationary period. In conclusion to everything, altcoins are going to be the savior. It's going to be a new asset class, and people are going to flock into altcoins in the long term. 2025 will be a bullish year. Crypto, my friends, is the place where you flock away from any political economy, any command economy, and any other economies around the world. Because this is a new class, a new asset class. Tether generated more profit than BlackRock in 2023. Tether generated 6.6 billion, while BlackRock generated 5.5 billion. There's a new world order, and that, my friends, is crypto.